Australia has been warned that its $29 billion a year liquefied natural gas trade with Japan is in jeopardy as state and federal taxes and caps on domestic gas prices worry our global customers. Business editor Ross Greenwood joins me now live. Ross, good morning. Do you think that this is serious?
Oh, I think it is. I think it's really serious. It's a warning shot to Australia after many hundreds of billions of dollars have been invested in the liquefied natural gas business in Australia by our big international customers from Japan and Korea. Now, Japan is the one making the warnings right now, but it's only a few weeks ago that Korea made similar warnings to Australia. And this comes off the back of things such as tax caps in regards to LNG projects, the increase in the petroleum resource rent tax. You've then got price caps that have taken place, and also even the diversion of gas that otherwise could be uncontracted rather than going into the international markets is now being directed back into Australia to really cope with our shortfall of gas and the very high domestic prices of gas. So you can see really in regards to the gas prices and the importance of our gas industry just in terms of what it says. So here's our big gas customers. There's Japan, $28.8 billion, $28.9 billion. It's compared with China, $18 billion a year. There's $13 billion there, South Korea. These are all big markets for Australia, and this is what's going to come over a period of time. But when you sit there and have a look at really the amount of money that we have been taking out of this gas industry, some of the recent tax hikes, and in particular that increase in the petroleum resource rent tax from the government, the federal government here, which was going to raise another $4 billion, $2.4 billion that should be over the next 4 years. And the total tax on gas in this year around $16.3 billion. And effectively what Japan is saying is Australia be very, very careful. We've got tens of billions of dollars lined up for future gas projects that we'll be investing in. But if you really make this too expensive, there are other places in the world, and they name Alaska as one alternative place that they could get the gas from.
So, Ross, then what does the government do about this? Gas, after all, is one of our economy's biggest revenue earners.
Well, it is. Do you actually bank on the fact that we are the lucky country and that people continuously come here for resources? But of course, it's a global market, and it doesn't matter whether it's going to be coal or whether it's in the future copper mines, because Queensland right now, you've heard in recent times BHP saying it will not invest in Queensland as a result of its state taxes. It's also warned South Australia that it could go to Canada to develop future copper mines in the future as compared with trying to expand out Olympic Dam. So if we have a look at some of the big, sort of exports that we have, you've got, exports in 21-22. They rose the following year. Iron ore, $132 billion. Metallurgical coal made for steel production, nearly $30 billion. Thermal coal, of course, is made for energy generation, $14 billion. LNG there at $10 billion. So, these are important exports for Australia. The presumption has always been that Australia is a safe and reliable supplier. One of the things about Korea, for example, is that it really does not have to go through the South China Sea to actually deliver the product to South Korea. So it's seen in many ways to be a safer place for delivery of these commodities. But of course, we can't take for granted that we're the only place in the world that can produce these commodities.
No, we certainly cannot take that for granted, Ross. Now, just on another matter, the Treasurer has said, of course, that he will name the next Reserve Bank Governor in July. It's reported he now has a short list of names. So who do you think is perhaps likely to be on that list?
Well, for some time, a few months now, we've been trying to put together the list of people who are potential candidates. So we can go through them for you and just basically give you a little bit of a who's who. Philip Lowe, the current governor, has said that he's prepared to continue in that job if appointed. However, the market seems to indicate that perhaps, he's not going to be the person, especially given the review into the Reserve Bank and certainly in terms of some of the comments that in particular the Prime Minister has had to say about the performance of Philip Lowe in his job. There's also Jenny Wilkinson, who was the Secretary of the Department of Finance. She's now considered to be one of the front runners, as Sky News was reporting yesterday. But we've been saying for some time that we've thought she probably is the preferred candidate. Michelle Bullock is the Deputy Reserve Bank Governor currently, is also a natural person to obviously step into that top role. Is Guy Debelle, the former Reserve Bank Deputy Governor. We spoke with him on a Sky News forum just recently about this. He said, just wait and see. So that'll be interesting to see. There's the Chief Statistician, David Greenwood, is there, and also the head of the Treasury Secretary, Stephen Kennedy, is the other person who potentially could move, but that would leave a gap in the Treasury. And so he's probably less likely to move into that role as the Reserve Bank and is more likely to remain there as the Secretary of our Treasury.
All right, so a few options on the table there, but awaiting that all-important announcement by the Treasurer, hopefully sometime soon, Ross. Just finally, how have the markets opened up today?
A bit softer actually, Danica, and part of that is the US markets overnight, where some of the members of the US Federal Reserve have indicated that there are more rate rises coming there, so markets reacted as a result. So you can see here our market down around 0.2%, nearly 50 points on the ASX 200. If we have a quick look at the Australian dollar, what you can see is there, it's also just a touch off, around 66.5 US cents. The other one I'll show you is interest rates. Just money market interest rates. We also always show these. This is over the past week, and they've started to increase. That's the 3-year bond rate at 4.08%. But again, it still points to an economic downturn because short-term interest rates in Australia remain higher than long-term interest rates, and that generally points to a sharp slowdown or potentially even recession.
All right, Ross Greenwood, thank you very much for the update.